Well, hello everybody, and what a fabulous May Day it is. I'm here with two very good-looking guys, so it's going to be hard for me to keep focused on things today. But anyway, welcome to episode 28 of the Insiders on Real Estate and Marketing. I'm your host, Sandy Hibbard, and this is my co-host, Mr. Mark Miller.
How do you do?
How you doing?
I'm doing great.
Super good. I want to give a special shout out today to our sponsor, Secured Title of Texas. If you want to kind of experience their culture, understand their vision, see who you're going to be working with, go over to their website at securedtitleoftx.com and check them out. And I just appreciate them and Mark and his team. They have a staff of attorneys, underwriters. It's all done in-house. They're right here to help you get successfully to a closing, and they've been doing this since 1947. So I think they kind of know what they're doing. Thank you, Secured Title. So how you doing, buddy?
I'm doing great.
How's the week been? The month?
Week's been good. We had a big commercial closing yesterday that's resulted in a new client coming in out of Canada.
Fabulous.
Going to be developing townhouses, and they're kind of concentrating in the McKinney market. So
really,
I'm really excited about that. They're going to make an investment, probably 50 to 75 million more in land acquisitions.
Up in McKinney.
Yep, and that's their niche market that they're really focused on. So
are they doing that around that downtown square area? Is that building out?
That's moving as well, yeah. And then
Very
it's going
cool.
north up into Princeton side as well. So, but I'm more excited because I got one of my cohorts back with me, Amanda Pomeroy.
I saw your post about that.
Yeah,
oh
we
my
worked
God.
together for 15 years and had the opportunity to get her over with us. She starts Monday, and I know all her clients, and I'm really excited about that. She's a senior VP and with me at the corporate office.
Yeah.
There in Plano. So, and then just kind of watching the market. Brian will address that as well. I mean, there's a shift going on.
It is
and,
crazy.
It's not like all of a sudden there's low inventory, because it's been low inventory, but I think the continued taxation is testing the financial capabilities of companies out there. So I think I'm seeing layoffs happening in our space in the title business. I hear about it in the mortgage business as well. From that side, so the strong will survive, and Brian and I were talking about weeding out a little bit. It's not necessarily a bad thing,
right? No, it never is.
Yeah.
I mean, because today with the technology tools that we have and access to information, I think that sometimes less can get more done.
Right.
Yeah.
And you had company-specific niche, both title and mortgage, that were refinance only. Refinance is gone from that volume that they were running.
Right.
So if you didn't have that relationship balance with purchase business, then have a good platform for that, which Brian does, and the platform that we have, which we have commercial and residential, you're going to have a very difficult time, I think, in this year. This is going to be a really unusual year, I believe. Not that it's bad, because the demand's still there, but I think it's going to be challenging.
Yeah, I'm seeing those signs too. I'm excited to talk to Brian. So let's jump in. And why don't you introduce him? Tell everybody about where this guy come from.
You bet. Brian McCauley. He's a native Dallas Texan, and he and I have been friends for a long time, and I respect him immensely. He's with Fairway Independent Mortgage Corporation, and he has the McCauley team, and the McCauley team is a big-sized team. He's got a total of 13 members in his Dallas operation, and he also is out in Lubbock, Texas, and he's got 7 more out there. So he's running it. What I really liked, and I went in and just kind of Brian's always refreshing his website and things of that nature, and what I saw was that they hit 96% of their closing dates. 93% of accuracy on their closing estimates, and their retention rate is 87%.
Wow.
From a client standpoint. So they've helped average about 200 families a year that you help?
On average, yeah. Last year we had a great year on growth and helped 455.
Ooh,
so
wow.
Moving up quickly.
And I consider him to be the master of social media in his space in the mortgage side, because he's not only is he really well positioned, he's also very knowledgeable, and he shares that knowledge out. That's really valuable to the realtor.
Just the way it's supposed to be used.
Yep. And he's a great coach to the realtors as well, and we'll talk a little bit about that. I want him to mention core as well as we visit. But I love the other thing I loved. It said, we secure deals, create value, and solve problems. I mean, that is just right on. So he's always thinking out front. He's very high energy, as our audience will see. And I've never had a conversation with Brian that I didn't learn something in that conversation.
Wow.
So welcome
That's
Mr.
quite an
McCauley.
intro.
Appreciate it,
Welcome.
guys. Thanks
Yeah.
so much for having me.
So good to have you.
Congratulations on this. This is an incredible setup. It's really cool. I think a lot of people need things like this. So I appreciate
We're
you having
having
me
fun
on.
with it.
We'll make it a great show and give everybody a lot of gold out of this one.
I
Cool.
know we will.
Well, I mean, let's just start with the rates.
Yeah.
And we'll go from there.
Yeah,
Rates-
everybody's,
rates
like,
obviously
freaking
rising.
out.
I heard that this morning they were talking about 2 more additional rate hikes possible.
Yeah. I mean, they're up. I think, what the rate hike market is doing to people is really ticking them off. Not because, rates aren't still historically great, but it's just the time frame. That's
Yeah.
what it comes down to is, hey, pre-2022, there was a projection. Things are going to increase. Things are going to get a little bit worse, but here's the time frame in which we think. And the problem is they took a 12 to 16 month time frame and they squeezed it into a 90-day time frame.
Bam.
And that's the downside of transitory inflation, I bet. So what's happened is you've had all that swell up in a certain amount of time because they're trying to get it under control. And everyone out there that's trying to buy in a house has to pay attention to the rate, from qualifications to payments to financial strategy. So what it's done is, I think it's given people the understanding that things are moving quickly. Rates are probably not going to come back down. I think the cost of waiting is going to get more expensive. So you just have to talk to people about other ways to give themselves financial relief. That could be, different things in arms, different strategies on products, but a lot of times just helping people understand that they can pay off debt to offset some of that stuff. So while your rate might go up by 1%, your payment goes up by $100. It's not the end of the world. You get tax deductions. There will be a refi boom again at some point once all this is under control. But people have the opportunity to offset that with paying off credit cards and, paying down car notes. And so there's a lot of ways to seesaw it to help them out. But you just have to have those conversations up front, set good expectations, and drive clarity. Doing this for 16 years, it's all I've ever done. Certified planner as well. And so, we've seen a lot, we've done a lot. But I think the planning component helps people understand how to navigate the home buying process and keeps the fear out of it as much as it can.
What about, is buy downs a strategy again?
They are. So buying down an interest rate is kind of like, guys, if you don't know what that is, everybody qualifies for a rate. So there's 3 types of rates. There's a rate that you qualify for. There's a premium rate, which means you can take a higher rate and kind of get some closing cost credit backs. Or there's a discounted rate, which is a lower rate than what you qualify for. But to Mark's point, you have to buy it down, AKA pay fees. And so if somebody wants to get a lower interest rate than what they qualify for, they can do that. The question is it worth the money?
Right.
What's the trade-off? What's the break-even point? I personally am not having anybody do buy downs as much right now. The reason behind that, again, my feeling on that is if you pay $3, $4, $5 grand to get the rate back down a lower, a quarter of an eighth, it feels good. It's going to take you some time to get that money back, but I think probably back end of 23, early 24, you're going to get a refi boom. You're going to get rates back down. And so if people are paying for that rate right now, they're never going to catch them and get that money. I would wait till the market changes and they're actually
That's interesting.
get it better when rates come back down below where it's actually at. So it is an option. I think if it was a long-term play and refis weren't on the horizon in 12 to 24 months, I'd be doing that more often, but people might actually lose their money because they're going to do it up front and the refi boom hits in a year or two and all that money's kind of in vain.
Right. So what about down payments? Is
Yeah.
that being affected? Can you affect your rate by putting more money down on a mortgage?
It doesn't really affect the rate as much. It just affects the payment, right?
Right,
So
right.
people have to figure out when they're buying a house, the biggest thing you want to talk to people about is, hey, what are their big financial goals? What are they trying to do? Ideally, where do they want the budget? Ideally, what are they comfortable coming out of pocket? And then figure out of the two, which one's more important and why.
Right.
Tailor the loan to their needs and then give advice on, hey, this is your first time, second time, I want you to be a homeowner, but I want you to be a smart homeowner. And the way to create wealth through buying a home is not always pushing all your chips in. So
Yeah, true.
people can do it if they want, but sometimes I tell everybody buying a house should be like a game show. And the game show is called What's the Highest and Best Use of My Money? And if they all stuck us in a room for an hour and gave us a big pile of cash and said, you're buying a house, you got a car, here's your 401k, here your credit card bills, whoever comes up with the best answer gets $1 million. And what you'd actually find is pushing more money into the house is not a good use of the money. Emotionally, it's a lot, but 10, 20 grand in a house moves the needle $100. I'm like, you can save that by just not going to Me Casino once a month. So people just want a little guidance, right? They want a little help.
That's
and
so true.
They
And
can.
it's so needed.
Right, and they can, so it can affect the rate, it can affect the payment, but sometimes it's not actually the best thing to do, so you just got to walk folks through it and help them out.
Right. I read an article recently that said actually down payment percentages are going up as required by mortgage lenders. Is that so?
Yeah, sometimes they require a little bit more skin in the game. It's just a risk thing, right? Mortgages are just risk, and people have the risk of like, how much skin do you want to put in the game? So sometimes different loan products will change and go from 5% down to 10. The biggest challenge with the market and the rates is just, unfortunately, it's pricing certain price points out. What I find is like the $500,000 buyer and under has the biggest challenge. Your 500 to $1 million still has challenges, but they're a little further down the financial path in life. They're still able to get there, and then your 7 figures are up are not really affected, meaning yes, they don't love the fact that the rates are there, but it doesn't get in the way of them actually getting the keys. So depending upon the people, depending upon the price point, you just have to get more strategic depending upon who your client is.
Less options to more options.
Correct.
depending on your financial position.
Correct.
So we're still in a seller's market.
Yeah.
And we hear all the time the amount of cash buyers out there. How do you posture someone needing financing against the contracts that are going in with somebody that's going with cash?
Yeah, well, it's the old saying, cash is king, and it still is, right? And so there's a couple things that tell buyers, like if somebody is willing to pay all cash on a house and go over and above, the truth of the matter is they deserve it. They deserve it. They're going to beat you. But I'm okay, and the client should be okay losing to that, because those are losses we're willing to take. If they're going against a cash buyer and they're not willing to just throw money at it, a lot of cash people want to try to get a haircut or something on the deal itself because they're doing cash, right? So on financing, you can do a few things, right? One, making sure that people are fully pre-approved up front with a local mortgage expert is always important. It's the most important time to get it done right now, because listing agents and sellers have so much power. And so they want to know, hey, who's the client? Who's the lender? Are they really done? Is everything done up front? So a full pre-approval done up front helps. Number two, writing the shortest time frame that you can to get everything closed. 14 days, 20 days to shrink it all down. Obviously, the realtor is going to be the one to navigate the market and figure out appraisal waivers and where the actual offer price is at. The third thing for us is I know about 30 or 40% of the agents on the other side. So I will tell people, like, my relationship and position with them sometimes, even though cash is still great, if I can call them and say, hey, this is a great family, they're a slam dunk, I promise to close smooth and on time, that glue and that connection really, really helps. So having that relationship component of it is there. But, a lot of people that even have that kind of cash, it's not actually even a smart thing to do. A lot of investors will take it and they'll pay cash for the house to get it, and they'll turn right back around and do delayed financing and take some of it back out to use it for something else.
Really?
Right? But it's really hard to beat cash. You can position yourself great. You can have a super strong offer. You just got to do your best. So that's the way I would prep everybody. If they're going against any other lender or anything alternative from cash, we usually run 75% of the offers. I call the listing agent. I talk to them. We have a guaranteed 21-day close. We'll pay the seller $1,000 a day if we don't. So again, we strengthen our position on everything else. If somebody's got a dump truck full of money and they want to back it up, more power to them. But outside of that, we can still help people win offers.
Good.
Now, a lot of that's the strength of your team, but that's also combined with the strength of your brand as well.
Right.
Fairway. So, and how long have you been with them now?
5 years.
Okay.
Yeah.
So you gave that opportunity with a great deal of confidence that if we don't make the timeline,
Right.
you're going to step up. So you have that kind of confidence in your system.
Yeah, our system and our team.
Yeah.
I mean, mortgages are a team game. Whether you see it or not, it's a team game. It's like when we go on an airplane. Like, all we think about is we sit in the chair and they come in and get it done. But there are baggage handlers and engineers and all these pieces, right? And so you have to put that together on a home loan. To do it really well and to do it really fast, you have to have great systems, structure, but it's people. People, processes, systems, and technology is the name of the game. When you make that happen, you're able to deliver confidence because you understand you've done things the right way. You haven't skipped these steps. You have an awesome team, and they're all on the same page of understanding we got to move the ball down the field quickly, and we're a relationship-based lender. It's the biggest component. A lot of lenders are transaction-based lenders, so they don't get their referrals from people. They get it from loanmybills.com or LendingTree, whatever it is. And so what happens is, if they fumble the ball, if they screw it up, they don't care because they don't have a relationship with you or the referral partner. So who cares? We're the opposite. All of our relationships are with the client and with the partners, and so we have to care and have to do well because that's how we feed our families and survive. So it's our approach.
Love that.
What
Love
is
that.
Obviously property appraisals just came out.
Yes.
What kind of panic are you seeing? I assume existing clients,
Yes.
the homeowner themselves, have now got that. They're going, oh my gosh, what's going to happen? Are you getting calls of any consulting level with
Yeah.
the homeowner?
Yeah. So I got mine and I poured a heavy whiskey and sat down and thought, what do I do about this? So the first thing is for folks that get that out there, there's a good side and a downside with rapid appreciation. The good side is that you're making a lot of money. Ideally, that's one of the best things about being a homeowner is your ROI and the appreciation. The bad side is, the higher your property goes up, the more the value is. So when that happens to folks, I tell them two things. One, my best advice to them would be try to get with some type of tax protester or somebody in the county that knows the data well and will help them out, right? Fighting it on your own is tough, and so you want to make sure and protect yourself the best that you can. The second piece on that is, people have to understand that if it's a primary home and they've got their homestead filed after that first year, the property itself can go up as high as it wants. The property taxes themselves can go up as high as they want, but they're protected by that 10% rule, which is a great benefit on the state. So if you get punched in the gut after the first year, it should be the only time you get punched in the gut, but I'd really advise just to get with really good tax protesters in town, get with some realtors, get with some appraisers, and do the best to get, the best real appraisal as possible, because these counties don't actually know. It's kind of like they throw it against the wall and it sticks, and this is what they think, and they hope, hey, if you don't do anything, eventually you get past the deadline and we win.
Right.
You have to fight the fight really hard in that window to get it done. So go back to your agent, go to some attorneys, go to tax protesters. That's their job. They're here to help to get it all done. They give you an amount of time, but just don't sit back and do it or it'll stick.
Okay.
Whoa.
You've got a very strong realtor following, and I know not only by performance side, but you also engage in kind of helping them be strategic about how they go find that business. Talk a little bit about what I call your coaching in that range.
I appreciate that. So, in this industry, for the most part, the lender-realtor relationship is very parasitic. Lenders sit back and just ask for leads, right? Most realtors, when I talk to them and say, hey, why do you use so-and-so as a lender? They always say, well, because they pick up the phone and they close on time. And I say, God, they should. But the bar is so low that if you just do that, agents will use you. So about 5 years ago, I was introduced to a coaching program called The Core. It's the number one for lenders, number 3 for agents in the country, and they're the best group of folks that I've ever met, and they've changed my business. And so what they did is they turned it from a one-sided partnership to a relationship with a lot of reciprocity. And so what happens a lot of times is, mortgage lenders don't even know how to generate their own business or run their own business, so they can't help realtors outside of the loan. So going through the coaching and all that, to Mark's point, what it's done is it's turned me, in my opinion, to a mortgage partner, not a mortgage vendor. Anything from time management, lead generation, how to run a client appreciation party, how to set up a database, how to set a VIP system, gifts, on and on and on. Because what realtors want and what they need structure, right? They're great negotiators, they're good salespeople, but they're not good business people.
Right.
They don't have KPIs, they don't have metrics, there are conversions, all these things that businesses have. So learning that and having myself create the business in the lending space and then learning from great agents, I'm able to kind of give back to the agents in a separate area, because at this level, what means more to me is not just closing the loan smooth and on time. It's, hey, if I can help this realtor, grow a team, get 5 or 10 more deals a year. That's important because that's reciprocity. It just creates more glue between me and them. But it also creates the piece of like, if somebody asks, hey, why is this your lender? This person helped me get to this, and how to work a database. And so a lot of times you have to go through these coaching procedures and realtor growth program to help everybody understand there's a better way. I want to help you. And so just depending upon their pain points and where they're at, I just continue to pour in them as much as I can to get them to the level where they want to be. They just need some help. And so because that's been, a big part of my success, I feel it's my obligation to pay it forward, but also I find there's more value in me there, and it lasts a lot longer with my relationships.
Fabulous.
Cool.
And realtors do need that.
Oh, yeah.
They really do. Well, shifting over now to some marketing, as much as realtors are needing to feed their hungry buyers,
Right.
and there's not any listings, they're also needing to get clients in the pipeline. Everybody wants to go to social media, and if I have had one client, I've had every one of them ask me, how many leads am I going to get off this social media program? And I always back up and go, no. That's not what we're trying to do here. We're creating awareness. We're going to develop some online leads, but don't look at it as making your phone ring. It's not old school 2000. This is 2022, like we talked about last month on the side of technology, and it's time for realtors to become that creative in the technology that they choose to use for their business. So anyway, I wanted to talk about really quick getting more engagement. And in researching this, over 50 different influencers and huge marketing companies, the main thing that everybody's saying right now, especially talking about Instagram, is the reels. Getting your stuff out on reels, out on video, out on stories, in your posts, on YouTube. I mean, everywhere that you can get a video is going to be good for you. And Tom Ferry's been preaching this. I know you do it, Brian.
Yeah.
And Mark, we are seeing more and more realtors get into that, but still they're sluggish, just like usually they are to adopting any kind of technology. So increasing engagement is about using, especially with the new algorithms that are favoring video right now, all across the board, especially on Instagram. There's some things you need to keep in mind. And a couple of those things are just to be yourself. I have clients that will come and they try too hard. It's kind of like the actor that you see in a movie or in a play that's just trying too hard. Just come on, be natural, get with it, and be natural and be yourself. That's the first thing. Be yourself. Don't try to be anything that you're not, and get comfortable with being behind the camera. Keep it simple. Don't get into large detail on things. If you're going to do a video, if you're going to do a reel, keep it quick. And the best way of learning how to do that is just do one, because you'll find that you can't really talk a lot in 1 minute.
Correct.
So if you're going to do a reel and you've got 60 seconds, you've got to think of one message. What is the message I want to send today on this reel? It's got to be simple. Telling stories, getting out with your dog, going out on a hike, doing what you love, getting with your buddies on the golf course, going out and surfing, whatever, and get a little clip of that tells a story about who you are and what you're all about. That's super, super important. And then, of course, what we're talking about, keep it short. So you need to focus on, even if you're doing longer videos, 2 or 3 minutes are okay if you're posting on YouTube, if you're posting inside Instagram, if you're doing lives on Instagram and Facebook, I think 2 and 3 minutes is okay to have those mixed in, but overall you want to keep it short.
What do you run, about 60 seconds?
Yeah, I do.
Yeah.
I think to her point, think about it. You take out your phone, what do we all do? 1, 2, 1, 2, 1, 2. So first off, to your point, short videos are the way to go. Second of all, who's your target audience? People are confused on what the messaging is. And so it's like, hey, who are you speaking to?
Yep.
Once you know the target audience, it's either easy to deliver that piece about it. But I agree, attention spans are short. It's got to be good. I think the reels are great. What I'm finding, to your point, with some other folks in the real estate world is everything that I put out, I think about it from either a realtor's perspective or a client's perspective, and I want there to be something of value in the video, a takeaway from them.
Absolutely.
Which is like, I don't want to talk about, if I was an agent, don't talk about your new listing. You can say, here's my new listing, blah, 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 but give them, here's one thing to pay attention to, here's 2 things to pay attention to. I'm doing a new construction here and there. So the attention span's so short, you got to grab them quickly.
Right.
And then you just can't talk all about the day. There has to be a takeaway from them, right? So I try to make sure it's valuable, because in my head, I want to make sure that every time my video comes up, people say, ooh, last time that guy gave me a tip on credit. That guy gave me a tip on here and there. And so there's value and gold there to get it done. The consistency piece, I think it comes down to, it's a time management and a system deal. We're all over the place here and there. And so if it's not in their calendar, they're not going to do it. Or maybe it is, but they have a list of topics, but they're not that good. Or they don't like the way their nose looks, and so they don't get all that. And to your point, everyone struggles with that.
They do. Everybody does. I do.
But you have to get through it. And I promise the world is not looking at your eyebrow like you're looking at your eyebrow. What people are looking at, to your point, is it creative? Is it catchy? Was there something of value in it? I like it.
What can I take home and try myself?
Right.
Absolutely.
I think the more people do that and the more consistent they are, the biggest thing with social, it has to be consistent, but there also has to be variety.
Yes.
Right. And so to your point, a couple different angles, a couple different platforms. Yeah. There are some that allow for long form YouTube, things of that nature. But for the most part, it's easier, quicker, and more impactful to do the reels and all that. Yeah. And so I'm on TikTok, Instagram, YouTube.
I love it.
at Dallas Mortgage Man. You can go follow. But I try
I
to
love
make
your
it
stuff.
valuable and I try to make
At
it fun.
Dallas Mortgage
Mortgages
Man.
are nerdy and they're so flat and no one wants to hear about an application or things here and there.
No.
So I try to take a different approach, which is
Good.
just, hey, how to make it cool and trendy, but also just give away as much gold and value as I can in a cool, trendy way. So that way I get more engagement. And so our
That's it.
industry's behind. I know what not to do. So I'm trying to build out the platform on what to do.
Right, absolutely. And like Brian is saying, there's 4 ways that you can post on Instagram. You've got stories, reels, your feed, and live.
Yep.
And getting consistent and having your tools and your system engaged is what's going to help you quickly get these kinds of things done. So if you have all your tools together, if you have all of your accounts connected, so that like today coming over here, I'm at a stoplight, I do a 60-second promo for the show. I flip it up really quick on Instagram, cross post it over to Facebook. I go onto my dashboard, whatever they're called, Hootsuite or whatever, and I select all my accounts.
Yeah.
Boom, within 2 minutes, I have a video promoting this show on probably 8 different networks.
Yep.
Okay, you say, yeah, but you're a marketing person. Yeah, I've got my tools together. So if you want to do this, if you want to create more engagement in what you're doing on social, you got to think like a marketer first to get this content out there. And then if you need help, then that's where I come in. You call me, sandyhibbardcreative.com. Go to the blog, by the way, and I've got a new series I've just working on called the Engagement Series. And that's going to be up on Monday. So if you go to my blog today or over the weekend, you can sign up and I'll notify you as soon as this goes live. And I'm going to just talk about all the different ways that you can create more engagement and ideas for videos. Because I know that some of you just go, I don't know what to do.
know
You
what to
know, I'm
say,
going to do the
right?
same
Yeah.
thing.
Right.
And I do think that it's really important if you're a realtor, if you're a mortgage guy, if you're a title guy or girl, you need to keep your content focused around that. So if I'm a realtor and I'm never talking about real estate or I'm never talking about homes or I'm never showing pictures of a house, I think that's confusing. And I think that it's good to mix it up. If you go to my Instagram page, you're going to see that I don't do all marketing stuff at all. So I'm into the photography, I'm into the look and creating my feed, and I think that's cool. But somewhere along the line, a realtor's got to talk about what they do, their product, in a creative and cute, sassy way, whatever your personality is. Like Brian's saying, what he does on his thing, give somebody something to take back with them that helps them know, hey, this realtor just left me a really great tip that I'm going to remember, or that I'm going to take action on, or they told me about a new lending guy that I'm going to check out his stuff. So it's all about staying within the realm of your industry, because after all, you want industry leads, right? So don't just be out there at the swimming pool looking all sexy, girls. That's fine, but can you sell real estate?
Well, I think one of the things that I want your viewers to pay attention to is the reason you're successful on the social and the branding stuff is because you treat it like a business, not a hobby.
Absolutely.
And everybody that I know that's successful, that's impactful in the digital space, they treat it like a business because it is.
Yeah.
So if you look at all the stuff out there, no matter who it is and whatever industry that they're doing, they're everywhere, they're all the time, multiple platforms here and there because they take it seriously. And that's the way you have to think about it, right? Because the impact it'll have on you, to your clients in the outside world is real, but if you're spotty or just a random hobby, it won't get there.
Yeah.
So I love the way that you've got all this stuff set up. You're giving a more engagement series. That's the way to do it. A secret to folks out there, if you're just getting started, honestly, you just got to get started. But if you're curious on what to say and what to do, go to her page, go to his page, go to my page. Anybody in Dallas, you can look at all of our content and you can write down the top 10 videos that you like the most and just make it your own. So you don't have to be confused on what to say. There's so much stuff out there, but to your point, you got to get started. You got to be consistent and you got to treat it like a business.
Yeah, absolutely. So it's a wrap. So let's go through our 3 takeaways. And Brian, I'd like for you to leave 3 things with our audience today that you'd like for them to take away.
Yeah, so I think the 3 things out there that I want people to pay attention to from this show. Number 1, the cost of waiting is only going to get more expensive. House prices are not going to go down and rates are not going to drop anytime soon. You need to make the commitment and get with a good team. Number 2 is going to be social media and branding. To your point, you need to implement it in the business. If you don't have it, you got to take it serious. Go find some folks to help you. But the truth of the matter is you got to get started, keep going, and treat it like a business. Third thing is for those that are looking to move to Dallas, I think Dallas is one of the best places. There are 1 million people relocating here. Dallas is suffering from a population surge. We have way more humans than we do houses. And I think what we're seeing right now is going to be the norm for probably the next 12 to 24 months.
Wow. Thank you, Mark.
Amazing. I'd say 3 things. Be aware of the effects of a changing market. And that goes to the realtor community out there, is you better assess the people you have been doing business with or have the capability to continue to be available to do business with, because there's going to be a shift on the service providing side of this industry. So re-up your thoughts about that. And then I think everything's saying the same thing, pivot to the video world and get in front of people on that and bring value to the conversation. And then frankly, I mean, this guy's sitting here because I think he's the best in the business.
Obviously.
And I think if you want to see a system that really works, and you want to be with a reputable company and a guy that's committed to your success, and I'm not saying just Brian, but I'm talking about the people that he serves. You need to go to Fairway Independent and go to Brian's team and give him a call or reach out to him, because it'll be worth your time. So I value him very much. So.
Absolutely. My 3 things are sitting right here, 1, 2, 3. And, if you listen to our podcast, you know how Mark is always preaching. I'm always preaching about relationships and building your team. Who you work with really does matter. So if you need social media help, contact sandyhibbercreative.com. If you need title help, contact Mark Miller at securedtitletx.com. If you need mortgage, guys, if you are looking to have a solid partner in mortgage, if you are a non-realtor person watching this and you want to buy a house but you're lost and you're afraid you can't get enough money for it, contact Brian McCauley. Brian, what's your website?
DallasMortgageNews.com. And what other better way to brand yourself? I tried to figure out how I could be the mortgage man in Dallas, so I just made myself a Dallas Mortgage Man. Very easy.
That's it.
Simple branding 101.
And guys, that is how you do it. We'll see you in June. Until then, take care. Ciao, everybody.
Bye-bye.
Bye. Awesome.